A sole proprietorship is a type of business entity that is owned and operated by a single individual. It is the simplest and most common form of business ownership, and it is easy to set up and maintain. In this type of business, the owner has complete control over all aspects of the business, including decision-making, profits, and liabilities. In this article, we will explore the concept of sole proprietorship in more detail, including its advantages, disadvantages, and how to set one up. Advantages of sole proprietorship. Easy and inexpensive to set up. One of the main advantages of a sole proprietorship is that it is easy and inexpensive to set up. Unlike other forms of business entities, such as corporations or partnerships, a sole proprietorship does not require any legal filings or formal agreements. All that is needed is to register for any required licenses or permits, and the business can be up and running. Complete control. Another advantage of a sole proprietorship is that the owner has complete control over all aspects of the business. This means that the owner can make decisions quickly and without the need for approval from others. The owner can also make changes to the business structure, operations, or products without the need for approval from a board of directors or shareholders. Simple taxation. A sole proprietorship has a simple taxation system. The business owner is only required to report the business income and expenses on their personal tax return. This means that there is no need for a separate tax return for the business, which can save time and money. Additionally, the owner may be eligible for certain tax deductions, such as home office expenses or business-related travel expenses. Flexibility. A sole proprietorship is a very flexible type of business entity. The owner can operate the business in any way they see fit, and can change the direction of the business at any time. This flexibility can be especially beneficial for small businesses, as it allows them to adapt quickly to changing market conditions or customer needs. Disadvantages of sole proprietorship. Unlimited liability. One of the main disadvantages of a sole proprietorship is that the owner has unlimited liability. This means that the owner is personally responsible for all debts and legal obligations of the business. If the business incurs debts or is sued, the owner's personal assets, such as their home or personal savings, may be at risk. Limited resources. Another disadvantage of a sole proprietorship is that the owner may have limited resources. Since the business is owned and operated by a single individual, there may be limits to the amount of capital or expertise that can be brought into the business. This can make it difficult to grow the business or to take advantage of new opportunities. Lack of continuity. A sole proprietorship is dependent on the owner for its existence. If the owner becomes ill, dies, or decides to retire, the business may no longer be able to operate. This lack of continuity can be a disadvantage, especially if the business has built up a loyal customer base or has valuable assets. Limited access to funding. Since a sole proprietorship is owned by a single individual, it may have limited access to funding. Banks and other lenders may be hesitant to lend money to a sole proprietorship, as there is no formal business structure or board of directors to provide oversight. This can make it difficult to raise capital for business expansion or investment. How to set up a sole proprietorship. Setting up a sole proprietorship is a straightforward process. The following steps are generally required. Choose a business name. The owner should choose a business name that is not already in use and that accurately reflects the nature of the business. Obtain licenses and permits. Depending on the type of business, the owner may need to obtain various licenses and permits from the state or local government. This may include a business license, tax registration, and any specialized permits required for the specific industry or location of the business. Obtain an Employer Identification Number, EIN. If the sole proprietorship has employees, the owner will need to obtain an EIN from the Internal Revenue Service, IRS. This is a unique identification number used for tax purposes. Open a business bank account. It is important to keep personal and business finances separate. The owner should open a business bank account to keep track of all business-related income and expenses. Obtain business insurance. Depending on the type of business, the owner may need to obtain various types of business insurance, such as liability insurance or property insurance. This can help protect the owner's personal assets in case of any legal claims or damages. In conclusion, sole proprietorship is a simple and easy way to start a business. It offers complete control over the business, and is easy and inexpensive to set up. However, it also has some disadvantages, such as unlimited liability and limited access to funding. Before deciding on a sole proprietorship, it is important to weigh the pros and cons, and to consult with a legal or financial advisor. Thanks for watching this video from Brain Boost. Be sure to give us a thumbs up and subscribe for more educational content.